All right, folks. All that glitters can be gold, and that's the subject of the riff. Let me begin with a gold story. The Customs and Border Protection accidentally announced tariffs on the importation of gold this morning, and the yellow metal immediately jumped over $3,500 per ounce. And all kinds of conspiracy theories started to kick in. It was the Trump Treasury was going to revalue gold and therefore inflate the Treasury Fed combined balance sheet and create a lot of easy money as a quick fix to an economy which is today, truthfully, kind of close to stall speed. The one big beautiful bill is not going to kick in for a while, and that's the key to the Trumpian blue-collar boom, hopefully based in significant part on the building of new factories as part of Mr. Trump's superpower strategy. And that's all based on a flood of new tax incentives and deregulation moves. But Treasury sources tell me there'll be no tariffs on gold, and none were ever intended. Which reminds me of the great Shakespearean play, The Merchant of Venice, where the Prince of Morocco is desperately wooing the wealthy and beautiful heiress Portia. And somehow he banks his pursuit of her hand with almost unlimited buckets of jewels, and you guessed it, gold. But it turns out the Prince of Morocco shouldn't have put all of his bullion in one tray because Princess Portia was looking for love, not money. And suddenly the Prince of Morocco realizes that money can't always buy me love. And as he realizes his big mistake, he bemoans that all that glisters is not gold. Often have you heard that told. Many a man his life hath sold, but my outside to behold. Gilded tombs do worms enfold. Had you been as wise as bold, young in limbs and judgment old, your answer had not been enscrolled. Fare you well, your suit is cold. Which is a wonderful Shakespearean way of describing the sell-off in gold, which dropped down to $34.50 after the gold tariff rumor was put to rest. Come on, you got to admit that was pretty clever. It just goes to show you that, and I'm not even going to tell you where this is from, because if you don't know it, you're in trouble. The quality of mercy is not strained. It droppeth as the gentle rain from heaven upon the place beneath. It is twice blessed. It is blesseth him that gives and him that takes. Which brings me clearly to President Trump's new Fed appointee, Dr. Stephen Miron, who's being sent from the CIA to the Taj Mahal in order to teach the deep state central bankers all about the disinflationary benefits of supply-side tax cuts, deregulation, and, yes, tariffs. Here, take a listen to Professor Miron.
What we're seeing is that the stage is being set for a much lower sustainable inflation rate. Don't forget that it's the Trump administration policy to push out the supply side of the economy by tax reform, tax relief, giving companies incentives to invest more, to produce more capital stock, giving workers incentives to work more, deregulation, cutting red tape, energy abundance. All this stuff pushes out the supply side of the economy, and we all know that when supply goes up, prices go down.
So, guy's pretty good, sound thinker. Of course, Miron will completely move the center of gravity at the Fed toward President Trump's direction. And that brings me to President Trump's Truth Social post today, that tariffs are having a huge positive impact on the stock market, which went up big again today. And the Supreme Court would be foolhardy, indeed would create a judicial tragedy if it interfered with his tariff policies that are leveling the trade playing field around the world, opening up markets, incentivizing the kind of new factory building and industrial production that will not only create the blue-collar boom with higher take-home pay and new strategic strengths in semiconductors or pharmaceuticals, steel, AI, and so forth. So perhaps some things, after all, do indeed glitter as good as gold. And that's the riff.